Welcome to the weekend market update. It is Blake with Trade Tracer. Make sure you go hitting that like and subscribe in the bottom right. As always, none of this is financial advice. Let's go ahead and get started. Okay, so we are in a 6-day downtrend on the S&P 500 and the Nasdaq, and I have the SPY pulled up here on the daily time frame, and you can see this level is a previous all-time high that we broke out from and then wanted to retest, and right now we are basing below the previous all-time high. Now this is a bearish formation pattern. This is a bear flag. You have the pull running to the downside and then some consolidation below a previous all-time high with a MACD momentum indicator heading to the downside. So right now I am 100% cash. I am patiently waiting for my rules to trade, which will be a break above, priced back above the 10 SMA on a daily time frame. Until then, I am sitting cash, patiently preserving year-to-date gains. We've had massive uptrends with the NASDAQ. We've had stocks like Apple, Tesla, Amazon, Netflix, Zoom, Workhorse. All of these names have performed extremely well for us, and I am in no position to be pressing anything here. Now, I want to make one thing really clear to everybody. You have to know when to press, and when I say press, I mean be aggressive, and you have to know when to let your foot off the gas pedal and protect capital and play defense. Right now, we are in the mode of playing defense, all right? It's hard enough to be right on one side of the trade, let alone both. So if you're trying to trade long and short, that is a difficult task and one that's has a low probability of success. And if you can do it, hey man, congrats to you. You're one of the very few. But just being right on one side of the trade is hard enough. And we like to focus on the long side of the trade since we are still in a bull market because the weekly and monthly time frames still show positive uptrends. But here on the daily, it is time to play defense, and I am not going to be risking any year-to-date gains that we've had on these massive uptrends. Now, patience is one of the things that I think we should probably talk about. It's one of the hardest things to learn as a trader. If you're sitting at your screen, watching the screen every day, you're going to be tempted to go ahead and to jump into trades. It happens to the best of us, but now is the time not to be sitting at your screen and doing things that you enjoy. Go work out, go walk the dog, go for a jog, whatever it is that you do, go play golf, get away from the screens for a little bit. The markets are going to be there when you come back, and they're going to be there for much higher odds in the next uptrend. So that's what I'm doing, waiting for the next uptrend, constantly scanning for the best setups, and taking very small day trades with 5-minute rules to trade. Now, right now, I'm going to be lightening that up because we're in a downtrend and it's very difficult to trade those. And this last week was the week before OPEX, where we oftentimes, not every time, but oftentimes put in pivotal lows before OPEX. Okay, so the S&P currently is holding this 50-day moving average, which is very important. So this 50-day moving average is something we need to keep an eye on. As long as this holds, this could be the potential pivotal lows heading into next week. I'm not predicting that, but it is something to keep an open mind about. Okay, so right now, the best play, in my opinion, is to just, relax. We've had a phenomenal year. Let your foot off the gas pedal. Let the market digest these gains. And it's never about getting the tops. It's never about getting the bottoms for me. It's always about getting the bigger trend. Okay, if I'm getting 85% of the chunk of a trend, I'm completely happy with that. As long as those are risk adjusted trades where they're in my favor in an uptrend. It's all about stacking those types of trades. So make sure you have some patience. Make sure you have some discipline as well to not look at the screen, to go take a break. I'm telling you that the market is going to be there, and if you're looking at your screen, you're going to be tempted to trade because you're going to be seeing opportunities in the market, but those opportunities are going to be much more profitable and have much higher odds in your favor if we have just a little bit of patience. All right, so that's my advice for this next week. We're going to be keeping a close eye on these 50-day moving averages on the SPY and the QQQ. But let's go ahead and take a look at some of the others. TLT bonds actually have rules to trade. Prices back above the 10 SMA. But we're still below this 50-day. If bonds come back above this 50-day, that be careful, okay? We could be in some more downside for equities and some more upside for bonds, and we'll likely go ahead and increase bond exposure in the investment portfolio. Gold as well is looking fairly constructive. We're breaking above a downtrend, holding above the 50, and this is the previous all-time high. If we go ahead and pull out on the monthly time frame, you can see this 185.85 on GLD is the high that we put back in on 2011. Okay, so pretty much a 10-year breakout. If we can get back above that level, it'd be a nice add for us in the investment portfolio. So that's going to be something we're also keeping an eye on. But until then, I think it's time that we let our foot off the gas pedal, go work out, go walk the dog, whatever it is you do, get away from the screens for a little bit and just wait for those higher odds to kick back in, especially if you're a swing trader. Now is the time to really, enjoy these gains that we've had and protect that capital and wait for those higher odds. So that's all that I have for you guys today. I'll see you again tomorrow morning. Take care.